First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Emily Parker, filling in all this week for Christine Lee. Joining me is my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn. Good morning, Lawrence.
Hey, good morning. Morning, how are you?
So, good, thank you. How are you? So, let's first take a look at Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at over $49,000, and the latest ETX Ether price is currently trading at over $3,300. And then the latest DFX CoinDesk DeFi index is trading at over $700. So, Lawrence, what's going on in the markets today?
Yeah, we just saw Michael Saylor has apparently bought MicroStrategies just bought another 170 some odd $1 million in Bitcoin, but the markets aren't as buzzy about it as they usually are. You know, Twitter's not afire as the old days. But what's interesting to note is that about a month ago, about 60,000 Bitcoin left centralized exchanges around the time that Binance had issues. And as Umkar Godbole reported today, a third of those have come back. About half of that amount has come back into the market. About 29,000 have come back to centralized exchanges. And that's usually a headwind for Bitcoin because it means that more Bitcoins are available for sale on centralized exchanges to the retail customers. So if we're hoping for a massive bull rally, we have a little bit of headwinds ahead of us.
Yeah, there's quite a lot going on this week, right? We also have the infrastructure bill being discussed in Congress in Washington. And then we also have Fed Chair Jerome Powell is supposed to be talking on Friday. We don't yet know what he's going to say or if what he'll saying is going to have an impact on the market. But those are two sort of more macro pieces of news to move on, to look out for. Okay.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So this summer has seen a rising tide of major funding for crypto firms. And today we have Bitcoin infrastructure firm Blockstream is making big waves with their news, which is a $210 million raise to move into ASIC development. Joining us to discuss today is Blockstream CEO Adam Back. Welcome, Adam.
Hi, thanks for having me on.
So first of all, congratulations on this massive raise. Can you tell us a little bit first what you plan to do with all that money?
Sorry, could you repeat the question?
Adam, sorry, I had some audio issues. So congratulations on your raise. Can you tell us a little bit about what you plan to do with all this new funding?
Right, so a number of things that are growth areas for us. We are a miner, so we do mining for ourselves and for institutional customers like Galaxy, Fidelity, and so forth. And that obviously is a growth area with the profitability of mining right now. So one area of funding is expanding our hosting and self-mining. Another is this new entry point into actually manufacturing miners. So that brings a kind of a new supply chain outside of China to the mining manufacturing business, and there's a shortage of miners at this time. And also, we recently announced acquiring Admant Capital. So we released our first financial product, the Blockstream Mining Note, which has been doing pretty well since July, making about 0.3% return a day. So it should break even if things stay as they are, which is always an open question with Bitcoin, in about a year on a 3-year product. And also generally accelerating our Liquid and Bitcoin Layer 2 development projects.
So, Adam, Mazel Tov on your purchase of SPONDOOLIES, rather. It's an Israeli firm, but a lot of mining seems to be moving to North America now, with China making it harder for people to mine there. Do you think that's going to change the overall dynamic of how Bitcoin is viewed and how Bitcoin is mined and how it's traded? Does it become more of a North American instrument than it was before?
Well, I think you want a certain amount of geographic diversity, and commentators had expressed concern about the buildup of hash rate and mining equipment operate in China. So we'd noticed and published a report some months ago before the China crackdown on local mining that actually the mining had been growing faster outside of China than inside China for the last 18 months, but certainly the crackdown brought a sudden change to that. So I think that was largely from sort of more institutional investors getting involved in mining, to the extent that the kind of geopolitical aspects have been diminished in investors' minds, that may allow more entrants to enter the market on the institutional side.
Adam, while we're talking about mining, and specifically mining in North America, as I'm sure you've been following, there's been a huge controversy in the crypto community about the crypto tax provision in the infrastructure bill. And crypto advocates are basically saying that due to the way that this bill is worded, it could subject miners to crypto tax regulations that they would not be able to comply with, and thus essentially push crypto mining out of the United States. Now it looks like this infrastructure bill is going to potentially might move through Congress. How worried are you about this? I mean, is U.S. mining under threat from Washington?
So far, it appears not. I mean, I think there were, for people following it closely, there are a lot of twists and turns and last-minute things, as always in politics. But it seems that there was a carve-out for mining, and maybe some interest from Treasury to clarify, because the intent of the people involved in drafting the bill kind of got put on hold at the end due to a generic veto, some aspect of US politics. So it seems like the intent was to make it, to not kind of impede a growth area for the economy at this difficult time in general.
So, Adam, you, of course, will say that you're one of the not inspiration for proof of work in Bitcoin. You were the second person Satoshi ever emailed, for instance. And you also have Blockstream Energy that lets miners buy energy from just about anywhere. So, since you're the guy behind proof of work, basically, what do environmental activists get wrong about it, or people who have used the environmental argument against Bitcoin and have cited proof of work? What are they getting wrong? And is proof of stake really a better, a more environmentally friendly way of mining crypto, or is there a flaw that you see in that it doesn't answer, it doesn't help anything, it doesn't actually do anything?
Yeah, I mean, I think proof of stake is effectively a federated system, much closer to fiat, and has some kind of technical limitations. I think probably it's the case that any kind of commodity money needs to have a physical cost of production, certainly the case for physical gold and for Bitcoin. And in terms of the ESG discussion, I think people miss that there is an enormous amount of untapped and underused green power in the world. So, for example, we have one of our mining farms in the Quebec province in Canada, in Montreal, and the Quebec province has it's about 50% used of its capacity, obviously that's partly because of peak demand. And so it has
Adam, unfortunately, we're having some trouble hearing your audio. But anyway, congratulations on your raise, and thank you so much for coming and sharing your insights. Thank you so much. That was Adam Back of Blockstream. Coming up, diving into crypto markets and some advice for advisors. Time now for the daily forecast, a look at what's happening in Asia crypto news. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 24th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, a former campaign advisor to South Korea's current president has been jailed over a crypto scam. The Philippines says AXIE Infinity earnings are subject to tax. And trading volume for CryptoPunks NFTs soars to new heights. Let's get you up to speed from Asia to the world. First up, a South Korean professor has been jailed for 2 years over a crypto scam that cost victims close to $20 million. He was found guilty on fraud charges for falsely promoting an underdeveloped cryptocurrency named Coin that he shilled back in 2017. It's also been revealed that around that time, the professor was also part of the current South Korean President Moon Jae-in's winning presidential campaign. It's shaking up the halls of power. Forecast News' Danny Park has more.
Seoul Central District Court revealed on Monday that the former dean of a public university was sentenced on August 13th. The professor gave several talks in 2017 promoting Coin, sharing false information suggesting the coin's price would grow 100 times in the near future, and saying it was certified by the Bank of Korea and the Financial Supervisory Service. Around 5,000 fell victim to the scam, losing over $18 million. Coin's 2 CEOs were prosecuted last year, with one serving jail time right now. The professor still denies the charges, claiming the talks were purely from academic interest with no intention to gather investments. He has already appealed the ruling. Many commented online that the sentence was too light, with one user saying, "It's amazing how he only got 2 years. That's why Korea's a heaven for financial criminals." For Forecast News, I'm Danny Park.
Meanwhile, a new saying is emerging in crypto: if you can't beat them, tax them. In the Philippines, tax authorities have turned their attention to focus on play-to-earn gaming, specifically AXIE Infinity. It's massively popular in the country, with some gamers in the Philippines actually making a decent income from it. But now the government says earnings from playing such games are subject to income tax. So what does this mean for the future of crypto earning potential in a country that has economically gone backwards since COVID? Forecast News' Monica Ghosh has the details.
According to a report by the Manila Bulletin, the Philippines Finance Undersecretary Antoinette C. Tionco says users of play-to-earn platforms are required to report their earnings for taxation. And the government is looking closely at AXIE Infinity specifically, as it is not registered in the country. Key to what sort of tax is due depends on whether AXIEs are defined as a currency or a security. That's something that's yet to be determined by the Securities and Exchange Commission and the central bank. A gamer named Porky, who made $20,000 from AXIE Infinity last month, told Forecast News that while he will pay taxes if the law says so, the government should have clearer implementation and guidelines. Nearly 40% of all AXIE Infinity users live in the Philippines, and while the minimum monthly wage in the country is $170, some, like Porky, make hundreds or even thousands by playing. But taxation could be a big hit for those who rely on the income to put food on the table or to buy medicines. For Forecast News, I'm Monica Ghosh.
And finally today, CryptoPunks are raging. Its trading volume has gone through the roof. As you may already know, CryptoPunks are pixel-style NFT artworks of misfits and eccentrics created by Larva Labs. And according to data from DappRadar, trading volume increased over 1,000% in the 24 hours up to the beginning of the Asian trading day on Tuesday. The buying frenzy was kicked off by the announcement that financial services giant Visa bought CryptoPunk number 7610 for 49.5 Ether, or around $150,000. So why would Visa make such a purchase? Well, on their website, they say they're looking for partnerships in the NFT field, and that, quote, this is just the beginning of their work in this space. Seems like NFT markets could be set for a wild ride ahead, with more and more joining every day. And that's the Daily Forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Let's check in on Bitcoin again. The CoinDesk Bitcoin XPX index is currently trading at over $49,000. And the CoinDesk Ether Price ETX index is trading at $3,300. The new DFX CoinDesk DeFi index is trading at $706. So our next guest is an investment advisor focused on helping financial advisors explain crypto to their clients. Tyrone Ross's company is called Onramp Invest, and he's the CEO. He joins us for today's markets discussion. Welcome, Tyrone.
Thank you for having me. How are you?
Good. How are you?
Well, thank you.
So let's just start out with a quick markets update. Recently we had Bitcoin crossing the psychological barrier of $50,000 after people were sort of complaining about summer doldrums and a summer bear market. What, in your view, is what drove Bitcoin over 50,000 finally?
I think the same thing that always drives it up: the psychological barriers, as you mentioned, in speculation. It's amazing that all of the different movements in the market and with Bitcoin, there's always this, well, what moved the price and why is it going down and why is it going up? But it's still up over 4 times since last year. There's going to be these little movements where folks are trying to figure out, are we going back into this raging bull or have we entered a bear market? But from a financial advisor's lens and just folks in general, I think stepping away from the price a bit and just looking at on-chain analytics and seeing the usage and daily active addresses and things like that, to me, is more telling than the price dipping below or above 50,000. But, when you have a market that trades 24/7, 365 and highly liquid, this is what you get.
So Tyrone, what's the biggest obstacle you find as an advisor, or when you talk to other advisors? What do you think? What do you hear is the biggest obstacle for investors to purchase crypto even after they learn more about it? We always talk about, well, investor education would lead people to buy crypto, but of course it's not 100%. So where's that obstacle, and what causes it, and what do you think advisors can do to overcome it, or should they even bother to overcome it if it's not right for the investor?
So I think it's more on the advisor side. It's advisor education, right? Hence the wonderful newsletter that you all put out. That's a great need. So advisor education is lacking. The retail side of the business is very robust. Retail has been booming, right? If we go back to 2017 and before that. So, the first the investment class led by retail investors, the institutions and the advisors are trying to catch up. So I think the biggest hurdle here for advisors are themselves. And as an advisor and the CEO of a company that is building for advisors, 99% of financial advisors should be in a learning phase here. They shouldn't be doing much because there's so many hurdles that financial advisors have to jump in order to even give advice or allocate on behalf of clients. So those of you that are tweeting, fire your financial advisor if they don't put you in Bitcoin, please stop that nonsense. But anyway, back on my rant. I think if advisors get educated, thus educate the clients, it's a lot easier to bring clients into a holistic relationship. Because again, financial advisors plan, estate planning, investment management is not the same as asset management. Wealth management is very different because you're looking at the whole life of the client, not just their investments.
So Tyrone, it seems like advising on crypto would be kind of a perilous field to get into just because it's so unpredictable, it's so volatile. People are always asking me, why did Bitcoin do this? Why did Bitcoin do that? Nobody really knows, right? So I guess my question for you are do you have any golden rules for advisors, when an advisor is getting into advising about crypto, like what they should do, what they should avoid, just some sort of baseline stuff to keep them from getting into really serious trouble?
Absolutely. A couple things. As far as practice management, you want E&O insurance. Make sure you update your E&O insurance. If you are SEC registered investment advisor, form CRS. All advisors update your ADV and your fee agreement. Those are the core 4 for the advisors. Core 4 for the client. Take your client back, redo their risk tolerance. Second one, investor policy statement. Pull it out. Mr. and Mrs. Client, you said you had no interest in crypto at all. Now you own $1 million of Dogecoin. What is going on? Financial plan. Take the client back to the financial plan. Why does this have anything to do with your financial plan, Mr. and Mrs. Client? You said you were going to retire. Now you own Uniswap. Doesn't make sense. Lastly, estate and inheritance planning. Who besides you understands what Solana is? If they do not, we need to figure out who that person is and talk about a digital fiduciary.
So you mentioned the investor policy statement. Do you think that, do you find that, have you talked to any advisors about issues when, for instance, investors get a winning streak, their unwillingness to rebalance their portfolio to adhere to the IPS?
Yes, and I think we'll think about it, right? With an asset class that's so volatile, it may start out as a 10% allocation and then quickly be a 90% allocation. And I think studies have shown if you are allocating to Bitcoin, especially, that you should rebalance more than you usually would. And I was just talking about this on Twitter, actually. We advisors and the investment community in general takes for granted that we know what it means to rebalance, but the average individual isn't doing that. And they're definitely not going to do it on a very frequent basis. So an advisor would be good to, remind clients of that. But I think, again, in that statement, you're basically setting it's a prenup for your relationship with the client, so to speak, right? So I think if advisors really lean on that, for instance, meeting with the client 2 or 4 times a year, with crypto, you should definitely meet with a client once a month.
So, Tyrone, let me just ask you one final markets question, but from your standpoint as an advisor. Right now, DeFi is really hot, and there's all these DeFi projects. But for new investors, DeFi is really confusing. It's really hard to make sense of. How should a new retail investor make sense of DeFi, and how could they know which projects are worth investing in and which they should stay away from?
Fantastic question, because it's very compelling to see the yields in DeFi when your bank account is giving you 0 point nothing. I would encourage folks, again, you have to be where the information is. It is on Twitter, it's on Discord, but here, CoinDesk, the right resources. You can't go to your Barron's, your Wall Street Journals, and your Yahoo Finance. You have to go to where these projects are being vetted and getting, true background on how they are getting that yield. I think if investors do that, they'll be okay, because it is very compelling, again, when, you still get that little purple lollipop and a sticker from the bank more than they're giving you anything in your account.
Thank you so much, Tyrone.
Absolutely.
That was Tyrone Ross of Onramp Invest. So that was a very timely discussion because CoinDesk is actually launching a new newsletter on Thursday. It's called Crypto for Advisors, and it's specifically for financial advisors and registered investment advisors. You can sign up for it on CoinDesk.com. Coming up, the latest from the regulatory front from CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
Welcome back. Time to check in with CoinDesk's Global Policy and Regulation Managing Editor, Nick Day, who is also the editor of the State of Crypto newsletter that is out today. Welcome, Nick.
Hey, good morning.
So, Nick, lots of stuff going on in Washington. What happened in the House yesterday? Did anything happen in the House yesterday as regards this very controversial crypto tax provision in the infrastructure bill?
Yeah, so nothing specific to the tax provision. The bill itself is just kind of getting started in the House. They were up late till around midnight last night. Just trying to verify that the Democrats had all the votes they needed to pass the bill and, to begin with. But, it seems that's still kind of up in the air. There's a lot of, politicking going on behind the scenes right now. Moderate Democrats want to ensure that the bipartisan bill is passed, regardless of whether or not any, strings are attached to the much larger, more partisan bill that the Democrats are also working on in the Senate. Whereas progressives want to make sure that the Senate passes the $3.5 trillion bill before they agree to pass the one that we're talking about. So it seems that that's still going on. They're going to reconvene today at noon Eastern and continue those discussions. But as of right now, it's really unclear when and how things will pass or even move forward. We do know that there are still lawmakers trying to amend the crypto provision specifically. Reportedly just this morning, Representative Darren Soto announced that he was going to try and offer an amendment. But again, it's going to really come down to whether or not House Speaker Nancy Pelosi wants to open up the can of worms as far as the amendment process goes and allow this to happen.
Yeah, if of course they do allow amendments on crypto, it's going to lead to a whole bunch of amendments. Is that why? I mean, what are the odds really of Pelosi allowing this to go through to the floor? Or is she just going to say, "Look, this is just guys. I don't want to have to hear from the squad and from Gottheimer in the middle and everybody else." Do you think that she's going to bring down the hammer and just make it go?
Yeah, everyone I've spoken to, industry insiders, folks who are on, every side of this issue, no one expects the amendment process to begin. No one expects this bill to be modified prior to its final passage.
Thank you so much, Nick. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day, also the editor of CoinDesk State of Crypto newsletter on CoinDesk.com. That's it for First Mover. Thank you, Lawrence Lewitinn, Managing Editor of Global Capital Markets. I'm Emily Parker. Coming up next is The Hash at noon, and then All About Bitcoin at 3. You're watching CoinDesk TV.